Hi, everybody. Hello and welcome to ICICI Prudential and CNBC TV18.com presents Smart Investors with me, Sumera Aarti. Now, the first step of investing is to evaluate one's risk appetite and thereafter find out all you can about the asset in which you're investing. So this helps in coming up with a solid investment strategy, something that every investor needs before taking the plunge into financial markets. But the question remains how to multiply your wealth while taking into account your risk appetite, and how can you derive the maximum benefit from your investments. Now, one such option is the fund of funds, which is a good bet for risk averse investors. So what is a fund of fund? Basically, it is a scheme, mutual fund scheme, where you're putting money and the fund manager, instead of deploying that money directly into stocks or bonds or commodities, whatever the case may be, what the fund manager is doing is investing further into other mutual funds, thereby diversifying your risk and, of course, the platform of investments. And also, you get the benefit of varied investing styles as well. Now, this portfolio is devised to work for investors across financial goals, thus, investing in numerous fund categories, like I said, assets, bonds, shares, domestic, international, you get it all. So today, let's try to gauge how fund of funds, or FOFs as they are called, are ideal for those kind of investors who have low resource requirements and want a stress-free investment. I'm joined by Mr. PV Subramaniam, who's the CEO of supramoney.com, to talk about this further. Hi, Mr. Subramaniam. Thanks very much for joining in. So, we know the basic premise of a fund of fund, which is to say how it works in theory. Can you give us a sense of practically how an FOF would work, and why would it stand out from, say, any other category of mutual funds?
So let me answer the second part of your question first. SEBI has created very many categories of funds, which is large cap, mid cap, small cap, multi cap, etc. So it's very difficult for an investor to make a distinction between where to invest, etc. So therefore, there is a fund manager who picks up. You pick up a fund of fund, and the fund manager decides how much to put in a large cap, how much to put in mid cap, how much to put in a, or whatever. Yeah, I can actually create a large cap fund of fund, which will pick between, say, three fund managers, and say, okay, we can put into three large cap, any of these things. So it basically is meant to reduce the effort for the investor and his advisor, so that they can just pick up one fund and they need not pick up three, four funds, which is more difficult to choose.
Okay, so basically it keeps you from having a large portfolio of schemes, because some people will have like 20, 30, 40 schemes, which become very unwieldy. So in this way, you're saying that you get the flavor of many schemes, but your portfolio is simplified. Am I right?
Yeah, perfect. See, also what happens is, because of SEBI's rule, there is purity. So a large cap fund will be a large cap fund, a mid cap fund will be a mid cap fund. So there is no worry that when you put in an FOF and they put 60% in the large cap and 30% in the mid cap, both are pure, right? So you don't have mid cap, large cap any overlap. So that has been helped, and it simplifies it for the investor.
Okay. But Mr. Subramaniam, this raises a question that, if the option is, see, the reason we pay for active fund management is that, we are hoping that a fund manager will sort of generate, benchmark beating returns, or alpha, as we call it. If the fund manager's only job is to further deploy into other mutual funds, why would I want to, as an investor, want to pay more for a fund of fund than an ordinary fund? I mean, FOFs therefore have a higher expense ratio, right? Because you're paying twice.
Technically, they will have a slightly higher ratio, but when a company comes out with a fund of funds with its own scheme, then they don't charge anything extra. It is only the AMC which they make in each of their schemes. But it allows you to choose how much you want to put in large cap, mid cap. Let us take something like fund of fund. It will have a pharma thing, it will have banking, it will have infrastructure. You wouldn't know from which fund when you should go to another fund. Now, overall, if you take the cost, One important cause for you would be capital gain. Suppose you shift from pharma fund to infrastructure fund, you will pay at least 10% tax by coming out of the pharma fund. Whereas in a fund of fund, when you shift from a pharma fund to an infra fund, you don't pay tax. So if you did a 10-year or a 20-year SIP, you pay tax only at the end of 20 years when you withdraw. Whereas if you were to do it yourself, you would pay more. So I think overall cost, including the tax, FOF would be lower.
But the fund of fund doesn't have equity taxation. Is that a negative?
Right.
And what about this dividend distribution tax? Will it apply here?
I doubt whether in a fund of funds you will go for a dividend option. That will be pretty confusing. So you should stick to a growth option and pay tax like a debt fund. So don't withdraw for 3 years, and after that, if you want to withdraw, you should withdraw. So then you pay short term, you pay long term capital gains like a debt fund. But it is not 1 year, and 1 year is. I mean, don't. It's not an equity. Even if the fund of funds investing in equity funds, you will be treated like a debt fund, I mean, or a non-equity fund.
Okay. So besides the objective of diversification being fulfilled, what might be the other reasons an investor would look to fund of funds? Would the risk be notably lower?
I don't think the risk really changes because whether it's a direct equity, whether it is an equity mutual fund, or whether it is a fund of funds, the basic market remains the same. So the risk is there, but what happens is sometimes when large cap does well, your large cap funds may be doing well, but your mid cap and small cap may not be doing well. If you have a FOF which has a large cap, mid cap, and small cap, your standard deviation will be lower, and your return might actually be higher because of that. So yes, I don't think the risk is lowered, but the volatility should be lowered.
Okay, fair enough. How would you compare the performance on an average of fund of funds compared to their own peers in say direct schemes?
It's very difficult and very early stages, but it should give you similar returns with lower volatility, which actually translates to better returns. I won't say higher returns, but it will. Okay, let me put it this way: to get this much of return, how many sleepless nights did you have? In an FOF, you will have lesser sleepless nights than in a direct fund. That's all.
Okay. So would this then make sense for a new investor or somebody who's just entering the market? Therefore, a relatively easier way to get the flavor of the market with lower volatility.
Yes, of course.
Okay.
Yes,
And
sure.
if somebody was to say start off with a fund of fund, let's in this case say some form of equity fund of fund, what are the kind of schemes that would complement it in the portfolio?
Complement the portfolio. I mean, if he is keeping a fund of funds, which is allocating only among Indian funds, he can take another fund which is allocating among foreign funds. So you have a fund which invests in US, Japan, Europe, Asia, and another Indian fund. There will be no duplication. So you could have two fund of funds, uh, one investing in India, one investing abroad. So there will be no duplication. Otherwise, and this should be more than enough. One fund which is investing in a large cap, mid cap, small cap, and a fund which is investing abroad. Uh, that should be good enough.
Okay. Can you give us a sense of what are the kind of schemes which are available under fund of fund? I think the most popular would be the ones which are investing abroad. Besides that, what would be good options? I know you mentioned some thematic schemes as well, but can you
Yes.
give us a sense of the entire bouquet?
Yes. See, uh, I've seen I've seen another fund from a fund house which is investing in the indices of developed countries, which is again a foreign fund. Another global advantage which is investing in various countries around the world. Then there is thematic which invests in different themes. See, we club all the uh, thematic themes. and say thematic schemes are doing well. That can't do well. See, sometimes it is banking which does well, sometimes the pharma doing well. So if you can invest in a FOF which invests in different themes, then I think this completes your portfolio. You don't need anything more than that. You can also invest in a fund which has a little bit of equity, debt, and some gold. That is also possible. So these three, four options should be more than sufficient for you to cover the full market.
Okay. Mr. Subramaniam, how, within a fund of fund, I'm assuming that the other, the schemes which form the fund of fund, uh, considering then the portfolio of that fund of fund, how often would these be rejigged or re-looked at, by the fund manager?
It's difficult because I don't think that is there in the offer document saying that we will do it so often. But normally they do it on a monthly basis at worst. Somebody could be doing it on a weekly basis because that is the very purpose. The purpose is that any time you pick up, you want 60% in large cap, 50% in mid cap, and 10% in small cap. So they do it on a weekly basis, but it was at least on a monthly basis. This actually helps because you are able to sell funds which are doing well and buy those which are not doing well. Whereas in your personal life, it's very difficult to remove money from the fund which is doing well.
Okay. If the scheme was to exit one of the underlying, mutual fund plans, would that incidence of capital gains also fall on the investor?
See, this is what I said. The advantage of investing through a fund, which could be an ETF or a FOF, the taxation happens only when you withdraw. You will not have to pay tax when the fund manager makes the change. So if he shifts from Japan to US or US to Europe, you don't have to do anything. No tax. There is no taxes. There is incidence on you. Even assuming as an end investor, you know how to invest. You know that this is a good time for Japan, not a great time for US. So you exit US and enter Japan and all that. You will not have to pay tax if you're in FOS, whereas if you did it individually, you will have to pay.
Okay. One of the concerns with FOF has been that, there is this, what can I say, there is this higher chance that there would be a big overlap in terms of the stock or bond portfolios of the underlying scheme. So how can, say I as an investor keep track of what is the kind of overlap between the different schemes, and, is it necessarily bad?
Yeah, I mean, you should not put money. See, this. I see a lot of retail investors doing that. They put money in a large cap fund, then they go and buy HDFC, Hindustan Lever, etc., saying, "Oh, these are good companies. I don't mind buying it." Now, if you also put in an FOF which has got large cap, obviously there will be duplication and even triplication because the same shares everybody would be buying. So you should ensure that you don't invest in multiple schemes. But if you're very confident about one fund manager, you put money in that, and there could be some duplication you can't avoid. But yes, you have to be careful. You should not large cap fund and in an FOF which invests in a large cap fund. Makes no sense.
So a large number of fund of funds are international focused. Are they impacted by the current ban on mutual funds investing in stocks abroad?
See, there is not enough clarity. Yesterday, when they have come out with something saying on 1st February or 1st April 2022, you can invest some more money. So hopefully that limit of 7 billion will be raised to say 20 billion or something like that. Then this won't impact. But otherwise, yes, it does impact. Even if you are in an index fund, which is an FOF, you are impacted by this. So yes, to some extent you will be impacted. But if you are in an ETF, you may not be impacted. Only the mutual funds are impacted.
Can you give us a sense, sir, of how the growth has been for fund of funds over the last few years in the Indian context?
Actually, it's very. It used to be an old concept, but I don't see very many successful fund of funds. So it's too early to judge. But I think over next 5, 6 years, fund of funds will get more popular because SEBI has said that there can't be overlap, right? You can't have a large cap fund investing in mid cap and mid cap fund investing in small cap. So if that can't happen, fund of funds will get more popular. Earlier, the fund manager himself would from a large cap also buy mid cap. Now with that kind of indiscipline going away, your FOF will become more important.
And globally, what has been the experience with a product like fund of funds?
I really wouldn't know, but in the US, fund of funds are popular. But what has happened recently, a lot of it has moved to ETF and passive funds. Then once you move to passive, you may have to do all of this by your own. A passive fund of funds may still be expensive. So right, recently, if you see last 5, 6 years, the move has been away from active to passive. So if you have a passive FOF, that might have done better. But you also have to remember last 5, 7 years, there's been a bull run in the US. In the bull run, every fund looks good. It's only in a bad market. Only now you start judging them and you'll find that FOF has done better.
Okay. Also, in terms of fund of funds, you already mentioned the white basket, which is currently available to investors. What is the kind of innovation that is possible? I mean, if the call is that they will increasingly become more popular, what can we as investors expect from here?
First of all, investors have to control their FOMO. Go and tell somebody this Brazilian fund did well, they will say, oh, let's put all the money in Brazil. You don't actually end up doing that, right? So if you can control your impulse of investing in very many funds, putting money in one FOF, which invests in 3, 4 funds, if you're happy with that, if you're happy with reasonable return, then you can expect good return. But if you keep removing money from an FOF and putting somewhere else that is performing better, if you don't monkey around, then there's a good chance. Well, but ultimately, it will depend on investor behavior rather than the manager behavior.
I understand your point. So one more thing, I can imagine that there are many advantages to fund of funds, but like everything else, it might, have a downside too. So from an investor's point of view, what might be the challenges that investors should be aware of?
See, investors might have very high expectation from the fund manager as if he's perfect and he knows that this is the time to exit pharma, exit banking, enter infrastructure. That's not true. You have to remember that fund managers are humans too. So he may partially shift from pharma to infra does well, and then he may shift the remaining part of pharma. So perfect timing, if you expect, it may not happen, but he might still do a better job than what we can do ourselves. But we are very harsh to judge others, and we are very nice to judge ourselves, saying, "Oh, I was busy, मैंने ध्यान नहीं दिया," or some stuff like that. But we expect a fund manager to be 100% perfect. That may not happen. Fund managers may make mistakes. So be ready for that. If you think he's giving you a better return than what you can get on your own, he's doing a good job. But how will you judge how well would have you done? That is a challenge. Again, like I said, Myra, back to investor behavior rather than market behavior is the best.
Fair enough. One more thing that I wanted to check with you is that, for somebody who's invested, see, when we invest in a mutual fund scheme, the advice that we give out is that, regularly keep checking your portfolio so that, you don't want to be caught unawares. You want to be on top of, where things stand. For a fund of fund, what is the kind of portfolio that an investor should check? I mean, on the face of it, the portfolio is just say what 5 or 6 schemes, right? So are we expected as investors to check the underlying of each of those 5, 6 schemes?
Actually, I don't think so because once you have given it to a professional, what are you going to do even if you check? Let's say I look at Naren's fund and I don't like some parts of the portfolio. What am I going to do? I'm going to tell Naren, look, I don't like this. You have to make sense. Answer is no. If my fund can help me meet my goals, if it pays for my daughter's education, if it pays for my retirement or buying a bigger house or whatever, I should not bother on a hour-to-hour basis than a day-to-day basis. Overall, if I'm happy with the return, I should just stick around for 10, 20 years and not worry too much.
All right, Mr. Subramaniam, thanks very much for joining in today to answer all of these questions on fund of funds. So, for all investors out there who have been keen to understand this subject, well, this is pretty much everything that you needed to know. So, I hope you've had.
Just one more
sir,
thing.
go ahead.
You have a choice of investing through an ETF or an FOF. In case of an ETF, you can't do an SIP because you have to do it yourself. So therefore, again, an FOF is better for the common man who does not even have to have a demat account to do an FOF. But in an ETF, he'll have to do it through a demat account. That's all.
Got it. Thank you so much, sir, for joining in. And I hope everybody who's watching has enjoyed this chat, and I hope that it's been a learning experience for you. Thank you very much for watching. Stay safe.
Thank you so much. Bye.
दूसरा रन लेने की कोशिश, लेकिन ये रन आउट।
चाचू रन आउट।
कोई जरूरत नहीं थी रन लेने की।
इन्हें तो साथ भेजना ही नहीं चाहिए था।
कौन मैदान पर आता है?
अब अगला कोई एग्रेसिव प्लेयर आए तो सही होगा ना।
अरे अग्रेसिव तो खड़ा है ना स्ट्राइक पे भैया। कोई डिफेंसिव प्लेयर है तब तो जोड़ी बने।
लेफ्ट हैंडेड बैट्समैन की जरूरत है। लेफ्ट हैंड और राइट हैंड का कॉम्बिनेशन बॉलर्स को भारी पड़ेगा।
और ये कैप्टन का सही डिसीजन, लेफ्ट हैंडेड बैट्समैन की एंट्री।
सही जोड़ी ही मैच जिता सकती है। इसलिए जब हो आपका टैक्स प्लानिंग का मैच, आपको चाहिए टैक्स सेविंग्स और वेल्थ क्रिएशन की सही जोड़ी, जो आपको मिलेगी ELSS फंड के साथ। जब जोड़ी राइट तो फ्यूचर ब्राइट। ICICI प्रूडेंशियल म्यूचुअल फंड, तरक्की करें। Mutual fund investments are subject to market risks. Read all scheme related documents carefully.